I was reading through this fascinating Crypto report, and it details exactly how the biggest names in cryptocurrency are looking at the intersection of blockchain and artificial intelligence. You know, these are arguably the two most disruptive tech forces of our time, and they're colliding way faster than anyone really anticipated. We aren't just talking about chatbots helping you draft emails today. No, we're talking about a fundamental restructuring of how global money moves, who's moving it, and the absolute bedrock infrastructure making it all possible.
So let's start right in the deep end with a recent post from Coinbase CEO Brian Armstrong. He threw this thought out to his 3.2 million followers, and man, it instantly sparked a massive conversation about a sci-fi future that is, well, rapidly becoming our reality. He confidently states that agent AI will actually outnumber people in the economy in the years to come. Just think about that premise for a second. It's staggering. But then he asks a question that sets the stage for everything we're exploring today. When do you predict the Agentic Finance flippening to happen?
Now, the sheer scale of what Armstrong is proposing here means we need to unpack his exact terminology, the Agentic Finance flippening. Usually in crypto, a flippening means one asset's market cap overtaking another, right? But here, he's applying it to the entire global economy. He's talking about the specific future moment when agent-to-agent payment volume officially eclipses human-to-human payment volume. It's a literal tipping point, a point where the majority of economic activity, the actual movement of value, is no longer driven by you and me, but by software programs transacting directly with other software programs.
Let's put that into perspective. Think about the friction in our current human-to-human system. It's slow, it's incredibly manual. Whenever we want to move money or make a purchase, we're pulling out credit cards, dealing with clunky user interfaces, signing physical contracts, or literally waiting for a traditional bank to open on a Monday morning. Now contrast that with agent-to-agent transactions. It's a completely different paradigm. We're talking about a high-speed, automated economy driven entirely by AI agents that don't sleep, don't take weekends off, and can execute wildly complex financial maneuvers across borders in milliseconds. It's totally frictionless.
And here's the thing. It's incredibly important to realize that it's not just Coinbase seeing this trend. We aren't just looking at the isolated opinion of one optimistic tech CEO here. The absolute heavyweights of the cryptocurrency world are forming a powerful consensus around this AI-driven future. It's actually becoming a foundational thesis across the whole industry. When you've got fierce competitors and leaders of entirely different blockchain ecosystems aligning on a single macroeconomic vision, yeah, that's a massive signal that paying attention is no longer optional.
The list of believers reads like a who's who of crypto titans. You've got Jeremy Allaire from Circle, Justin Sun from Tron, Changpeng Zhao from Binance. They're all actively tracking this rise in AI adoption and publicly endorsing the long-term potential of these autonomous agents. Specifically, they're zeroing in on how these AIs will inevitably integrate with blockchain ecosystems. These are leaders managing billions in stablecoin volume and exchange liquidity, and they clearly see that crypto and AI aren't just parallel tracks anymore. They are on a high-speed collision course.
But, okay, this brings up a massive logistical hurdle that absolutely has to be solved before this economy can thrive. How do these AI agents actually negotiate and transact with one another across the globe without a human stepping in to verify identities and click approve? Think about it. If an AI representing a logistics company needs to buy data from an AI representing a weather satellite, how do two distinct pieces of code inherently trust each other when real money is on the line?
Well, Ethereum creator Vitalik Buterin recently mapped out this exact workflow to solve the trust issue. He explained how a blockchain serves as the perfect, unchangeable foundation for these agents to function securely. It breaks down into three key parts. First, the blockchain provides a space for neutral negotiation. Neither AI has a home field advantage. Second, it offers permissionless action. An AI doesn't have a passport or a social security number, right? It can't walk into a bank branch and open a checking account. But on a blockchain, it doesn't need anyone's permission to create a wallet and start sending funds. And third, trustless settlement. The blockchain acts as the ultimate impartial referee, letting these programs do business autonomously and instantly, without any middlemen. When you combine that level of advanced AI autonomy with the trustless settlement capabilities of a blockchain, something truly wild happens. You get a radical new type of economic entity, and this is already being recognized and modeled by institutional researchers. Traditionally, a corporation is made up of people, but we are officially entering the era of what experts are now calling zero-human companies, businesses composed entirely of smart contracts and large language models.
A recent report by Galaxy Research breaks this cycle down beautifully. They projected AI agents will evolve into these fully automated zero-human companies operating with a very specific, self-sustaining financial loop. Basically, these non-human entities will independently perform a service to earn capital. Then they'll evaluate the market to deploy that capital strategically
maybe into decentralized finance protocols to earn yield, and finally, they'll aggressively reinvest those profits to grow their operations. All of this happening fully on-chain. No human CEO, no accounting department, and no board of directors making the calls.
Now, if you're sitting there thinking, okay, this sounds like a fun cypherpunk theory that only matters to computer scientists, you really need to look at the macroeconomic scale projected by traditional finance and consulting giants. This isn't just about clever code anymore. This is about massive global wealth generation and a fundamental shift in how global gross domestic product is actually produced and mediated.
Just look at McKinsey. They recently released a staggering projection on this exact topic. By the year 2030, which, let's remember, is practically tomorrow, they expect AI agents to mediate between $3 to $5 trillion in global consumer commerce. $3 to $5 trillion. We are talking about trillions of dollars of economic activity shifting directly from human hands into the digital hands of AI agents. The sheer volume of transactions and the massive percentage of the global economy being handed over to software is honestly a little hard to wrap your head around.
And zooming in on just United States, McKinsey projects that a full $1 trillion of business-to-consumer retail revenue could be handled directly by these autonomous agents in that exact same time frame. Think about your daily purchases, your monthly subscriptions, your grocery orders, or even shopping around for the best car insurance. A massive slice of that pie is going to be managed, negotiated, and settled by personal AI software acting as a fiduciary on your behalf, negotiating instantly with software representing the merchants.
So what's the big takeaway here? The crucial point is understanding what this impending machine economy means for your financial future. If trillions of dollars are about to be routed through AI agents operating natively on blockchains, how do you, as an informed observer or investor, adapt to this shifting landscape before the broader market catches on? What's the practical application of knowing the Agentic Finance Flippening is on the horizon?
For that, we turn to financial giant Franklin Templeton. Their research hub developed a very specific thesis for this new era. Their core takeaway is a specific strategy. Focus on holding the underlying crypto and altcoins of the actual network infrastructure that these AI agents use to operate. The logic is super straightforward and fundamentally sound. As agent activity surges and millions of bots begin transacting, these AIs are going to need to pay gas fees, compute costs, and network transaction fees. That relentlessly rising automated activity is poised to directly drive sustained demand for those underlying infrastructure tokens.
Which leaves us with a totally fascinating, provocative thought to end our explainer on today. As we hurtle toward Brian Armstrong's Flippening, where machines are doing the vast bulk of the researching, negotiating, and transacting, the central question shifts. It isn't just about what you're choosing to hold in your portfolio today. The real question is, when the zero-human economy arrives, what tokens will your AI agent hold? Thanks for joining me on this deep dive, and I highly encourage you to keep your eyes closely on how this incredible intersection of AI and crypto continues to unfold in the coming months.